Good morning, Campbell McCreary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Alphamin Resources Corp. Alphamin trades on the TSX Venture as AFM, on the Johannesburg Securities Exchange AltX as AFMJF, as AFS, and as AFMJF on the OTC. Hope you'll enjoy today's program. Will also be available in replay mode. Do feel free to chat in your questions in the question pane of GoToWebinar, or simply email them in, and we'll ask the questions in real time. This event will be available about an hour after we wrap up, and you can get a copy at amvestcapital.com/replays. And then finally, on your way out, please do share your feedback. Will be very much appreciated either after the end of this call or in the feedback email. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please read this carefully. This call is most definitely for informational purposes only. Very pleased to have with us today Maurits Smith, the CEO of Alphamin. More than 15 years of experience in African mining and corporate finance. Prior to joining Alphamin, he was CEO of Denim Capital's African mining platform, Pangea, and CFO of Miniaturization Limited, mid-tier mining group with operations across Southern Africa. Again, following this program, during this program, please send in your questions in the question pane of GoToWebinar, and we'll ask them in real time of Maurits. So, Maurits, if you want to share your screen and turn on your webcam, we'll get started.
Thank you, Campbell. Can you see my presentation?
Not yet, but I see you. Got my cue.
Can you see it now, Campbell?
I cannot.
Okay, can you allow me to share again? Something went wrong on sharing.
Sure, no problem. Cue coming to you again.
Yeah, I don't know why it's not. It's showing that I'm sharing, Campbell. Let's have a look now.
Yeah. So what we'll do is I'll share my screen.
Can you just hold on 1 second?
Now we see it. Okay, very good. Just a little delay. Live from South Africa.
Yep.
There we go. Sorry about that, everyone. Off you go.
Thank you very much, Campbell, and welcome everyone. Again, my name is Maurits Smith, CEO of Alphamin Resources. We are listed on the TSXV with a market capitalization of just under $1 billion Canadian dollars. I just need to go through our health check with you. This will be available on our website as well. Moving on to our corporate overview. Really, our company is all about what we would call the forgotten critical metal, which is tin. Our Bisie tin mine, of which we own 84%, is the second largest tin producer outside of China and Indonesia. We currently produce 4% of the world's mined tin, and we have ambitions to become the world's largest, or one of the world's largest, long life tin producers. Certainly, bottom left of this slide, we are blessed with the highest grade tin deposit in the world at 4%, which is 4 times the average of 1% or less of any other mine anywhere else in the world. In terms of our Ebitda and cash flow generation in the first half of this financial year, we generated just over $70 million of Ebitda, and that was at a tin price of around $25,000 a ton. I see the tin price broke through $35,000 a ton today. In terms of our resource extension potential. I will go into a bit of detail on that later on in the presentation, but that really for us is a key objective in extending our resource base and potentially chasing scalability and incremental production in the not too distant future. Bottom right of this slide, in terms of the Alphamin Listco major shareholders, we have the Gerald Group, Sprott Equity, and Denham Capital based in the US as our major shareholders. Our free float vary between 30 and 40% of our issued shares, and very pleasing is that our share trade liquidity has increased quite dramatically over the last 12 months. We now trade the equivalent of close to 80% of our free float in a calendar year. With regards to the operating entity, the Bisie tin mine in the DRC, we own 84% of this mine, and the IDC, which is the Industrial Development Corporation of South Africa, owns 11%, for which they have made a direct investment with regards to the development of this mine. The IDC for us is a strategic shareholder with the South African government support, which is important in terms of our relationships with the DRC and the relevance of this tin mine in the eastern parts of the DRC. We're also very pleased to have the DRC government as a 5% shareholder of Bisie. On the next slide, just to summarize our value proposition, and we'll go through each of these points later on in the presentation. Point number one, we are a pure tin play. We really like tin. It is a strategic metal. It is used in electronic devices. It is key to technology going forward, and really it is the glue that holds our technology world together in the form of solder. In terms of an independent study done by the Massachusetts Institute of Technology in 2018, tin independently was ranked as the metal to most benefit from new technologies. In terms of the International Tin Association's study of 2020, the ITA regards a tin price of around $30,000 a ton as what is required for the world to produce enough tin to supply in terms of demand growth, particularly in technologies and green energy going forward. So for us, we believe we're in the right commodity. We have the world's richest tin mine, and we have significant optionality in terms of scale and life of mine going forward. So point number two, for us, very importantly, we developed this mine during 2018 and 19. So we've been producing at a steady state for 2 years now. We have proven that we can develop a successful operation and run a successful operation. We produce tin within the lowest quartile of the global tin cost curve, which is critical for us, which goes to profitability and headroom in terms of margins. And we have well-established infrastructure with proven export and import routes from our relatively remote location in the DRC. In terms of point number three, we see the current Bisie tin mine as our starter mine. We know that this deposit extends at depth, and we are drilling at depth effective July this year to extend these resources, and we'll make announcements with regards to that going forward. So the current deposit, we believe, extends at depth, and from historical drilling, it does appear that our grades increase with depth. So that's important for us. We are also allocating significant capital to drilling the next door deposit, which is called Puma South, and we have released a number of intercepts to the market over the last few months. This deposit appears to be not too dissimilar to our current producing operating mine. We are hopeful that this will become our second underground mine, barely a stone's throw away from our current footprint. And then further down on the ridge on our license area, between 10 and 13 kilometers south, there are a number of targets which we will also be drilling later this year, and I'll take you through the detail later on. And then last but certainly not least, in terms of sustainability, We have the right management team. The guys have proven themselves in developing this mine and running this mine very successfully. Our social license to operate goes to our sustainability and is absolutely critical for us in terms of our endeavors going forward. We allocate 4% of our in-country expenses directly towards community development projects in the DRC. And then Alphamin is a compliant, conflict-free tin producer, which is critical in one's ability to successfully sell tin concentrates from the eastern parts of Africa. In terms of our financial performance and balance sheet, a summary of what we have released to the market is contained on this slide, starting with our contained tin production and sales. Now, production and sales vary according to the head grades mined from underground on a quarterly basis. So you will see swings and roundabouts in production and sales, but on average over the last 4 quarters, we produced between 2,400 and 2,700 tons of contained tin per quarter, which is the equivalent of between 10 and 11,000 tons per annum. We have guided the market as to Q3 and Q4 of this year. We do see approximately a 10% uptick in tin production for the second half of this year compared to what we did in the first 2 quarters of 2021. And that, together with where the current tin price sits, certainly bodes well for profitability and cash flow generation in the short term. The next square to the right, top right, reflects our all-in sustaining cost versus the tin price. Now, all-in sustaining cost for us includes everything to produce and sell a ton of contained tin. It includes our smelter deductors and payability deductions, which is linked to the tin price. It includes all royalties and taxes. It includes all of our community development costs, logistics, marketing fees, and the like. So that really is an all-in cost, and it also includes our sustaining capex incurred in a quarter. So if one were to judge our all-in sustaining cost, you will see an uptick in that number quarter on quarter, and that really is directly related to the increase in the tin price. Around 15% of our total costs are linked to the tin price. So you will see that going up ever so slightly as the tin price increases. For Q3 and 4 going forward, basis slightly increased guidance on production, we expect our all-in sustaining unit cost to remain fairly flat from what is reflected for Q2. The tin price, you will see the rise in the tin price in that graph, and certainly the current price of around $35,000 a ton bodes well for the next foreseeable future. Bottom left is our Ebitda for the first half, as I said, just above $70 million. Q1 2021 benefited from a release of concentrate stockpiles in Q1 following a build-up in the previous quarter, and Q2 certainly came in at just under $35 million basis a tin price of $28,000 a ton. Our working capital and net debt, very good picture in terms of where working capital has gone, increasing from just under $20 million a few quarters back to around $60 million of positive working capital on our balance sheet as at the end of Q2. Our net debt reduced from $60 million a couple of quarters back to just under $30 million as at the end of June 2021. Our aim is to settle our external debt before the end of this calendar year, whereafter we will certainly propose to our board in terms of a potential dividend distribution and allocation of excess cash flows to our shareholders. So really in the short term, allocation of free cash flow will firstly go towards settling our external debt entirely. Secondly, we are allocating capital to our various drilling campaigns, which goes to our vision of extending our resource base and potentially increasing production. And then lastly, we will be looking to do dividend distributions subject to board approval, hopefully early next year. The next couple of slides deals with exploration and our life of mine extensions together with our scalability potential. As I said earlier, we have 3 areas of interest. Area number 1 relates to Puma North, which is our current producing ore body. As I said, this ore body is open at depth, and I will show you visually on the next slide why we are so excited with regards to our current drilling campaign, the objective of which is to extend our resource size at depth. The second area of interest is right next door to our current producing mine, and this is the Puma South deposit. We have drilled over 12,000 meters of diamond drilling to date, and will complete a just under 17,000 meter campaign in the next month to 5 weeks, whereafter we will work towards our initial maiden resource to be declared by the end of this year. Now, this deposit is very interesting in that every single hole out of the 52 drilled to date have intersected cassiterite, which means tin. Our assays, independent lab assays, related to 39 of these 52 holes have indicated high-grade tin in these various diamond drill holes. So we are very excited by what we're seeing at Puma South, and it's leading us to believe that there's another Puma North mine potential right next door, and I'll go through a bit of detail later on. And then in addition to that, along the Bisie Ridge, which is really a ridge running north-south within our license area over 13 kilometers, has a number of potential targets with blueprints similar to what we are seeing at the Puma North mine. So that really is our third objective in terms of whittling those drill targets down and drilling these targets towards the latter part of this year and into next year. In terms of the next slide, just visually, just to summarize our objective number 1, which is the current producing mine, you will see to the left, this mine plunges down, it plunges in a northeasterly direction. The last line of drilling back in 2015 intersected the highest grade tin out of any of our boreholes. Drilling stopped at that point because at that point we were satisfied that enough resource has been proven up to justify the initial start to mine. So we will be drilling at depth, down dip, along the previous intersections with step out holes around between 50 and 75 meter step outs to hopefully intersect further high grade tin mineralization and prove up a significant extension to this Puma North ore body. And then to the right, you will see the Puma South ore body, which again, as I said, that is a stone's throw from our current producing mine, around 750 meters to the south of where we currently produce. And all of our holes intersected tin mineralization, most of which were high grades. As we've previously announced, we've intersected anywhere between 1% and 7% in these holes. So certainly it is starting to take shape, and hopefully it will be our second high grade ore body, and hopefully will enable us to, in the not too distant future, convert this into a compliant mineral resource, do our homework and studies in terms of mining and the like, and then make a decision to mine hopefully in the next 12 to 18 months. And then thirdly, just visually, this is an aerial shot. You will see the Bisie Ridge in the center of the slide running north-south. At the top center is our current producing mine. Just to the south of that is Puma South, the second deposit, which I've just spoken about. And then another 8 kilometers further south, we have 2 to 3 very exciting targets, which from a structural, geochemical, and from a magnetic survey perspective, have blueprints very similar to what we're seeing at Puma North and South. Our experts with regards to these various anomalies are quite excited with the potential of these targets, and we will be whittling our targets down to drill targets in the second half of this year, probably Q4, to commence with drilling on these further targets. So really the potential is there for a second mine at Puma South, and certainly hopefully a third and fourth mine further down south. And just to conclude on tin, which in our opinion is the forgotten critical mineral, tin is quite a small market. There's around 350,000 tons of tin being refined and smelted annually, which equals demand at the moment. And to the left of that slide, you will see the outcome of the independent study done by the Massachusetts Institute of Technology, where tin was ranked as the metal most impacted by new technologies. Now, the MIT used a set of criteria in ranking these various metals. And in terms of the criteria, they looked at the ease of substitution, in which case tin ranks quite well. And secondly, and very importantly, they analyzed the potential impact of technologies, new technologies, on demand for a certain metal in relation to the current size of the market. And with regards to that, tin certainly ranks top compared to other metals. So the demand outlook for tin is very, very positive on the back of what is happening in EVs, on the back of what is happening in green technology, robotics, 5G rollouts, and the like. Tin is mainly used in solder, which is the glue that holds circuit boards together. So really, the fundamentals for tin are very exciting as the world moves into the next wave of the current technological revolution. But it needs supply to match demand going forward. And with regards to that, to the right of this slide, the International Tin Association has done a study in 2020 and projecting the all-in sustaining costs of producing tin globally going forward. Their opinion is that tin prices of $30,000 are required to stimulate incremental tin supply to meet demand growth going forward. It is interesting that the global average cost of producing tin has been increasing quite dramatically since 2006. And really the reason for that is that the low-hanging fruit has substantially been mined out in areas which are quite significant with regards to global tin supply, particularly in the Myanmar region, which borders China. This region has produced 15% of the world's tin, and it has now mined out the high grades on surface and moved underground, which is much harder, lower grades, flooding issues, ventilation issues, and the like. So really, because of lower grades and harder mining, the world is producing tin at higher and higher costs, which goes towards the incentive price required to stimulate additional supply. On the next slide, moving on in terms of tin, on the left-hand side there, you will see the relationship between the tin price and the Alphamin share price, which is clearly understandable. In the orange bars, you will note the increase in monthly share trade volumes for our share, which is pleasing to see. Going back to the tin price, a few bullet points, bottom left. Really, if one were to rewind this tin movie, the step change occurred in 2006 when lead was declared toxic and hazardous by most developed economies in the world. As a consequence, tin replaced lead in solders, and that really was a step change in demand. Since 2006, and particularly during the period 2015 to 2020, tin faced a couple of headwinds, notably in the miniaturization effect. Electronic devices have become smaller and smaller, which means intensity of use in terms of solder and tin in solder reduced over the last 5 years. But as the ITA pointed out, the miniaturization effect seems to be flattening out. So the intensity of use curve that's been working against tin for the last 5 years is also flattening out. Certainly my mobile phone is now bigger than what it previously was 2 or so years ago. So I do buy into that, and I do think that that is going forward a fundamentally would provide support for tin demand. And then, as I mentioned earlier, Myanmar produces 15% of the world's tin. Its grades are falling. It is battling to keep up in terms of maintaining supply. Certainly supply has reduced over the last 2 years or so, and mainly supply moves into China for further smelting and refinement. China is now looking elsewhere for tin. Myanmar is not providing enough material to keep its smelters full. China itself imports around 30% of its concentrate needs, and certainly, as I said, is looking elsewhere to supplement what it requires in terms of smelting. Then the fourth bullet there is relevant. The China-US trade war, as we all know, impacted the electronics industry over a period of 12 to 18 months, and that also impacted demand for tin. In terms of going forward, with green energy, with 5G, the Internet of Things, and the like, demand for tin, at the very least, is expected to follow growth in the electronics industry going forward. That in itself, at a conservative level of 3% a year growth rate, would require another 120,000 tons of tin in the next 10 years compared to a current market of 350,000 tons. And that's quite substantial. The world has enough tin underground. There's no two ways about it. There's enough tin resources. But these resources require a robust tin price to justify economic extraction and capital repayment with an appropriate return. So the world needs to see stronger prices for longer before, in our opinion, significant investment will follow in increasing supply going forward. And then the last point is very relevant. As I said earlier, half of tin's use is in solder. The cost of solder, which connects circuit boards, in relation to the cost of electronic devices is insignificant. So a higher tin price will not reduce or destruct demand for tin to be used in electronic devices. So that really for us is quite relevant going forward. There's enough resources, the world needs a good price, and certainly we are looking to play a role in feeding more tin into the world in the next few years. To the right, in conclusion, just to summarize where Alphamin is with regards to global tin, we produce 4% of the world's tin. China produces just under 30% of the world's tin from its mines, and then Indonesia around a quarter. Myanmar is listed there at 13%. The pie chart below that goes towards refined tin, so that's really where the smelters are located, and you'll see around half of refined tin comes from China. And between those two pie charts, you'll note the delta between what China mines and what it refines, making it dependent on Myanmar and other producers to supplement its tin concentrate needs. So in conclusion, we believe that we are in the right commodity, we are on a growth path, and we are looking forward to a successful outcome with regards to our various drilling campaigns ongoing as we speak. With that, Campbell, that concludes my slides, and over to you for questions.
Excellent. And you can hear me? Okay, good. I have a lot of questions. Thank you all for sending them in, and then I will turn this over to our analyst, Adam Graff, who will dig in a little deeper as well. What is stopping the management team from providing the market with a dividend policy at the third quarter results, whether that's percent of earnings per share, percent of free cash flow, ahead of a maiden dividend in 2022, similar to how Freeport, McMoran, and Alcator Metal did in early 2021?
I think very good question. Our board is debating that topic, and we will be looking to release a policy, I would say, towards the end of Q3, early Q4, with regards to a potential maiden dividend in early 2022.
Has anyone expressed interest in acquiring the company? Do we know anything about Denham or Tremont's controlling stake exit strategy?
So I wouldn't say that the phone is ringing all day long in terms of potential parties looking to take Alphamin out. I am very sure that Alphamin is very relevant to a number of tin producers, particularly in China. I have no doubt. If I look at our current offtake interests that have been expressed for our concentrate, the majority comes out of China, and really the Chinese are desperate for our concentrate. We produce very high quality concentrate. So certainly we are on the radar with regards to the tin world and the needs of major tin producers globally. In terms of the next question, the Denim investment, Denim is a private equity group. Denim has shared with me that they are under no pressure to sell. They do hold a significant stake in Alphamin. If the right price were to come, certainly Denim will consider that. Okay, I mean, there's no two ways about it. But they are also very interested in joining us on this path of expanding our resource base and potentially increasing our production base going forward. The matter of dividends are very relevant for Denim as well. And as I said earlier, they are under no pressure or rush to crystallize their investment. A flow of dividends certainly will satisfy the short-term Denim needs. And as I said, they are very willing to embark upon this journey of expanding our resource base.
Has there ever been discussion of share buyback, or is that rolled up with the dividend discussion?
Look, our preference at this stage is dividends. Certainly it is something to review, Campbell, going forward, depending on where the share price trades in relation to the inherent fundamentals of our company. So it is something that we will continually assess going forward. But dividends, in our opinion, at this stage, is first priority.
Solid trading float and impressive trading liquidity. Please discuss your plans to attract U.S. investment, both institutional and retail, and will you uplist from the OTC Pinks?
So in terms of retail investment, through our various campaigns in getting the Alphamin story out there, as I said earlier and as I showed you in the last slide, our share liquidity has increased quite remarkably. So certainly our campaigns are paying dividends, so to speak, in terms of getting the story out there. Retail investors are very, very active in our share, and that's very positive. We are also intensifying efforts in getting the story out to a number of potential institutional investors. And as you well know, institutional investors would be looking for a sizable investment to make it worth their while. So that we're working on. I'm just very happy to see the increase in our share liquidity. So that, for me, the proof of the eating is in the pudding, and that's very good to see. In terms of an uplift, a potential uplift to the main board, we have investigated that. There's no right or wrong answer. We have looked at statistics of companies that have gone through an uplift process 1, 2, and 3 years post uplifting. We've looked at the various impacts on their underlying share trade liquidity. We've looked at their share prices in relation to generally where the resource market have gone, and there's no clear indication that there's significant value to be unlocked there, Campbell. I mean, for me, at the end of the day, if we really battle to get our liquidity going, then that may be a potential. Okay, no hurt in trying. We are still reviewing it, but there's no conclusive evidence that that move in itself will create more liquidity and a value uplift.
What percentage of shares does management and board own, and do you continue to buy in the market?
So management and the board owns a couple of percent of the company, and management is heavily incentivized in terms of share options. So management's exposure really to the company is in the form of share options, which aligns our interest with those of shareholders. Will we be buying more? Well, you know, at the end of the day, our focus is on running this company as well as we can. We are well incentivized through the share price going forward, and I think that has served us well to date.
Someone comments, seems to be many never-ending supply of shares for sale despite the persistent rise in the price of tin. Are the 70 million odd 30-cent warrants responsible for this, and who owns them?
What was the first part of the question, Campbell?
Oh, just concern about dilution despite increase in share and tin price, and then who owns the warrants?
Okay, so in terms of dilution, last year we did, in my opinion, and I'm holding thumbs, certainly I'm convinced that that was our last capital raise, and we did it at a time where we felt that we needed to bring our debt exposure in balance. I wanted to create enough headroom between our cost of production and debt servicing requirements in relation to our gross debt exposure. So that raise for me was absolutely the right thing to do, even with the benefit of hindsight. Going forward, and this is very, very important for me, is that we need to create scarcity with regards to our shares. So this company is not looking to do capital raises going forward at this point in time. And certainly where we are with regards to our levels of debt, our cash flow generation, and the strength of our balance sheet now, I would like to preserve our number of shares in issue. In terms of the warrants, those warrants are held with by probably a handful of shareholders who participated in a particular capital raise. I think it was in 2018. It is what it is. I don't personally like warrants, but it is what it is. And those warrants expire in April next year. That relates to 80 million shares, which is around 6 to 7% of our issued shares.
Thank you. I'm going to pass it over to Adam. Going to dig in a little deeper. Adam.
Great, thank you, Campbell. I think a number of my questions may overlap with some of the additional questions from the audience. I noted a question here. I guess my question: when are you going to be net cash? I think you answered that. The goal is to be net cash by the end of the year. Are you still on that? Are you still? Sorry,
yeah,
we'd like to get there.
Yeah, we'd like to get there well before the end of the year, Adam.
And I would assume that you want to maintain a certain cash balance in the treasury. Do you have a feel for what that should be?
Adam, around $10 to $15 million in treasury we think provides an adequate buffer. We do have the ability to secure an in-country overdraft facility, which I think would then deal with the requirements to hold significant amounts of cash as a buffer. So I would say around the $10 million mark in terms of cash is certainly reasonable going forward. We would like to sweat certainly the asset, and as I said, our surplus cash needs to go towards our exploration efforts and balancing dividends and stakeholder distribution. So around $10 million, I think, is enough as a buffer.
Something that you mentioned during your presentation, that approximately 15% of your cost structure is sensitive to the tin price. Maybe you could detail some of that cost structure, and is some of that due to revenue royalties? So
the government royalties are 3.5% plus a 2% export fee. So that's 5.5% of revenue. We then have deductions in terms of smelter payabilities, which average around 4%. So you would get 96% of your contained tin as payable, and that delta counts towards our all-in sustaining costs, rightly or wrongly, but that's the way we report that, and that's the way we're required to report it. And then in addition to that, we do have a marketing fee with our offtake partner, which currently it is geared to the tin price. It used to be around 2 to 3%, and it is now at 5%. It is capped at 5% because the tin price is higher. So really it is split between marketing fees, royalties, and smelter payabilities.
Just thinking about off-site costs, I presume that you guys are responsible for paying for the transportation and insurance cost to get the concentrate to port, and then I'm assuming you're selling this to China, or are you selling it to a trader that takes care of that from a deduction or something?
So we have an offtake agreement with a trader. We are, in some instances, directly and others indirectly, responsible for the cost of logistics from our mine to the end user. We do have an offtake, as I said, with a trader, but there's absolute transparency with regards to that offtake agreement. So we have full visibility in terms of which smelters are taking our concentrate at what terms, and we do work closely together with our offtake party in determining the split of our concentrate sales amongst a couple of smelters, 2 or 3 smelters.
And are you in effect, are you responsible for those logistics costs as a deduction on your revenues or anything like that?
Yes, we're responsible for the costs, so we take the costs, but the actual logistics management thereof is the responsibility of our offtake party. We get paid for our concentrate on sale. When it crosses the border into Uganda in Africa, we get paid for our concentrate. So our offtake party is responsible for the movement of conc. They take risk in terms of that, but obviously we're getting the bill in terms of the cost of transport.
Is there a provisional pricing adjustment that you guys take that fluctuates with the quarter-to-quarter price of tin?
There is and there isn't. Okay, so we sell our concentrates ex-mine to our trader. When the concentrate crosses the DRC border into Uganda, which is the neighboring African country, we fix our tin price basis the LME 3-month price with our trader. So at that point, the price is fixed and we don't have any further price exposure going forward.
Okay, so your trader presumably is taking on the price risk from there forward.
Correct. The trader fixes our price basis the LME 3-month price at that point, which is a transparent and well liquid price in terms of the LME market.
Very good. Is it fair to assume, well, I guess you showed a chart where all the refined tin is coming from. So most of it's China and Indonesia. So does your concentrate typically flow to one or the other, or it just depends on where the trader wants to send it?
So Indonesia is a captive market. Indonesia only smelts what they produce in country. We don't sell any concentrates into Indonesia. Outside of Indonesia, the major smelters are in Malaysia, Thailand, and China, and we do sell our concentrates into those 3 regions.
Mm-hmm. Very good. Any thought, is there new refining capacity needed in the tin market? And if so, where is that going to come from?
No, there's more than enough refining capacity. Probably, I think 35%, 30 to 40% more than what is currently refined and smelted, which is a positive. Wow. So in Indonesia and China, certainly there's adequate refining capacity. The issue is feedstock and securing enough concentrates for which the world needs a better tin price.
Gotcha. Turning specifically to your assets, I'm somewhat familiar with the Renison tin mine in Australia, and I know their grade is significantly less. About last I checked, about 1.5% tin. Maybe you could compare and contrast, your mine with the Renison mine, which has been operating for decades, I guess. What's the mine life that you have on your current Mopana North, and what it's probably, you probably can't say very much on Mopana South, but maybe you could give us some indication of overall comparability to Mopana North.
So the Renison mine operates at significantly lower tin grades, and it produces tin at a much higher cost to Mopana North. And the reason is the head grade. Our grade is 4 times what the Renison mine has. The Renison mine is a very old underground mine, difficult to extract the ore from underground. It's not easy mining. They are trying to increase volumes to try and make up in terms of units and unit cost of production. And they're also trying to retreat some of the tin tailing dams on the property, which I think will add incrementally. Certainly at this tin price, I do think that Renison will be able to justify expansions on the back of their tailings retreatment, but not significant. The Renison mine produces just more than half of what Mpama North produces. And it's been operating for, I think, 40 or 50 years. So it goes to unit cost of production. It really was very difficult for the Renison mine over the last 5 years, with tin prices having been at the historic average of around $20,000 a ton. So that was an issue for them. So really it goes to the quality of the ore body, Adam. There's no substitute for a high quality ore body in mining. In terms of our life of mine, as I said earlier, we drilled the current Mpama North mine down to a certain depth of 450 meters below surface. That's where we stopped drilling, and we intersected the highest grade tin out of the whole campaign in 2015. So the ore body is delineated down to that level. We are absolutely convinced that this ore body extends at depth. So currently you have around 10 years. I would be surprised if we don't double that at depth following our various drilling.
Whereas you have 10 years from today, or beginning of 2021.
No, 10 years from 2019. So we have about 8 years based on the current delineated resource.
Okay, that's perfect. And so how are you? First of all, how is Mopana South shaping up versus Mopana North? I know you can't give me specifics because you haven't published your resource yet, but is the average grade, plus or minus, 10-20% from Mopana North, and how is the total tonnage starting to shape up?
So it's a little early days to comment on that, but broadly speaking, Adam, as I said, every single hole intersected tin, we are seeing very, very good grades. Whether this will be a 4% ore body, I don't know. But if it turns out to be a 3% ore body, it's going to be the second highest grade in the world, right? So we're certainly looking forward to it. I mean, anything above 2% for us, in my opinion, at this early stage, would be a go in terms of developing that mine. So we're very optimistic with regards to Mpama South. Incredible grades. And if one were to compare the results of our initial drilling campaign so far to the early years of the initial results coming out of Mpama North, they're not too dissimilar. They're not too dissimilar. But let's see. It's a bit early to predict. I'm very positive that there's something there.
How are you dividing a drilling budget between defining Mopana South and extending Mopana North?
So we're doing approximately half and half with regards to that. So at the moment, we are drilling around, or the second half, we are aiming to drill on average 4,000 to 5,000 meters a month, of which half would be Mpama North and half Mpama South. So really, for us, Mpama North is no less important than the Mpama South discovery and the ore body.
Is the thought process to are you currently maxed out as far as the throughput of your where your mine throughput is matching your concentrator?
Just about, yes. So we are probably, if you were to look at our Q1, Q2 results, we're probably within 95% of the limit, 90 to 95%, and we'd like to get to the absolute limit in terms of what we're putting through our plant coming out of Mpama North. So very close. In terms of Mpama South, we would need to build a bolt-on concentrator as an extension to the current footprint.
So the idea is to overall grow throughput versus just extending mine life.
Absolutely, absolutely.
Excellent. And just thinking about more your greenfield exploration up the Bisie Ridge, you mentioned you've got geophysical or geochemical, targets. Are you also doing surface sampling to confirm that you have elevated cassiterite grades?
Yes, we have completed geochemical sampling on surface. So we've got access to that data. We've got access to magnetic surveys data and structural mapping, which is the most important thing in terms of identifying the next ore body. You know, tin fluids follow structures, so the structural characteristics are absolutely critical. Between those three, we've plotted, or our experts have plotted, the targets down south, and it's remarkable to see how well these targets stack up to the blueprint of Puma North and South. We're very excited by that, so certainly looking forward to initiating a drilling campaign.
And what's the concept on that? Is that going to be a 2022 program?
No, we'll commence drilling down south towards the latter part of this year, and depending on how well it goes, you know, we could either be lucky and strike tin very early on, or in a few months' time, or later next year. You know, we'll see how that goes, but certainly we would like to allocate a fair amount of capital to those initiatives in pursuit of our third and fourth ore body.
Excellent, excellent. And okay, with that, I know there were lots of questions from the audience, so maybe I'll just hand it back to Campbell in case there's additional questions from the audience that he'd like to ask.
No, definitely have a lot of questions, especially Puma South. Can you put any timeline to this? What it would cost to develop, all sustaining costs? Can we extrapolate anything at this point? Everyone seems to think you have it all designed already.
It's a bit early for that. Suffice it to say that I'm holding thumbs that Puma South will at least be the second highest grade ore body in the world. As soon as we've completed our drilling and our maiden resource, will it inform how we can mine this, what the shape of the ore body is, what the potential size of the ore body is. So we really need to do the work on that, but we will push it as hard as possible. I would like to see the various mining studies completed on the back of a successful maiden resource statement during the first half of next year, and hopefully not too long thereafter can we, you know, assess a decision to develop.
That's your answer.
You know, if one were to look at our track record, Campbell, we're quite impatient when it comes to developing, you know, these mines and getting the production base to grow. So we're very excited and very energized to push as hard as possible on these various options, but by doing appropriate due diligence with regards to the planning and various studies required.
What's the higher priority? Expand north, deeper, or develop south?
Yeah, it's, you know, for me, it's 6 of the one and a half dozen of the other. You know, we're pursuing both aggressively. I don't see any one of those two being more important than the other.
Okay. Then what is the offtake agreement up for renegotiation expiration? And if it is LOM, does it only apply to Puma North, or does it apply to the whole district and land package?
It applies to the company's tin concentrate production, but it's a 5-year agreement, and we've already completed 2 of the 5 years, so there's 3 years to go on that, Campbell. It's not evergreen at all.
Okay. Not going to let you go without the obligatory question about operating in the DRC. Conditions on the ground. Can you give us some color? And then that would tie into ESG efforts in all ways. So I'm sure you have a few pages there on that.
So as a team, we've operated in various countries in Africa, including the DRC. What I really particularly like about the Bisie tin mine is that it is situated in the North Kivu province of the Eastern DRC. Now, the Alphamin mine is the only industrial mine in that province, which is absolutely fantastic in that there's no competition. It is visible, it is tangible to the communities. The local government is seeing the tangible benefits of sharing in our royalty payments, etc., etc. So we are really on the radar of national and provincial government, who are both very, very impressed with the fact that we developed this mine, and both can see and experience the impact that this mine is having on the on the local front in terms of security, in terms of employment, in terms of stability, and community development, and obviously taxes to the provincial fiscus. So operating in a remote location, strangely enough in Africa, in my opinion, is a major benefit. We are in control of our own destiny. We are generating our own power. We have established our own infrastructure in terms of our road networks. So for me, I'm really enjoying the journey in this remote location. And to date, after 2 years of operations, we've only seen support from our communities and the local government.
How do you manage security?
So in terms of security, there are hotspots in the Eastern DRC. There's no two ways about that. The hotspots are centered around mineral trade and other activities. There is no interest in tin cassiterite. It needs to be moved in volume to make it worth one's while. Considering you need to do this under the radar if you were to want to extract minerals in an illegal manner. So the likes of gold and diamonds will always be a risk when it comes to artisanal activity and illegal mineral trade, but certainly not tin. So we are not on the radar of any armed groups. There's no business for any armed groups insofar as our deposit and tin is concerned. The hotspots are managed. They are around 1,000 kilometers away from our mine, and we do move through these hotspots in terms of our concentrate exports every now and again, but that is being managed very well in terms of on the ground intelligence and the like. To date, we have exported over 1,000 truckloads of tin concentrate, and we haven't had an issue with one of those loads.
All right, thank you very much. I'll just pass it back to Adam. You might have any follow-up, or we're good.
Oh, I think we're just about to the end of our hour, so maybe Campbell, if there's no further questions from the audience, maybe
Okay.
It's time we can wrap up.
Yeah, want to thank everyone for tuning in. Covered a lot of ground. Got to most of the questions for our subjects, but I can always follow up in email and make sure Marit gets your question, and we'll answer it. When you log out, we'll be asking for feedback. Please share a few lines there or some more questions. And replay of this event will be available in about an hour at amvestcapital.com/replays. And that pass it back to Marit for to close it. Thank you.
Thank you, Campbell, and thank you for the opportunity to present our story. We are certainly excited by the prospects of Alphamin.
Excellent. All right. Good day, everyone. Bye.
Thank you.